Good morning, everyone, and thank you very much for joining me. This is the Morning Market Review. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM. Today is Tuesday. It is the 4th of April, and my email address, if anybody needs to contact me, rshaw@fxcm.com. Just going to go ahead and bring up our disclaimers. I'll keep this on screen for a few moments. Hey, Howard. Morning to you. Such a pleasure to have you on the webinar. Thank you very much for joining. Thanks everyone for signing in this morning. Much appreciated. On the agenda for today, I just wrote down, we'll take a look at the US dollar. I want to take a look at the Dex, the Nasdaq, and the Euro US dollars. And if there's anything that you guys want to take a look at, you just let me know. Before we move forward, there is going to be a live trade this Friday, live trade on a live account. That's for the non-farm payroll, and I've just posted that link into the chat, so please join me for that. I think the last two have been pretty good. Let's see how we do this Friday. Let's bring up the next disclaimer, which is our market commentaries disclaimer. Okay, and references market scope and trading view. I think it's probably, it's Good Friday this Friday. Yes, it is, but I think it is coming out. There's still going to be non-farm payrolls this Friday, Howard. So it's a public holiday here, but it's not a public holiday in the States. So non-farm payrolls is going to come out on Friday. So we will have the live trade. I completely forgot that it's a public holiday here. Nevertheless, we will go ahead with the live trade. All right. Let's bring up the US dollar. Okay, and we've been looking at this head and shoulders. I'm not sure it's going to complete. You know, just to give you an idea of what we're looking at here, just to put it into perspective. Hey, Katie. Good morning. Nice to have you on the webinar. All right. Let's just put it into context. What we're looking at here. What a head and shoulders is, it's a change of trend, and that's important for us to realize. We've seen it before. I just want to show you. The theory is, of course, markets don't move in a straight line. They tend to zig and zag. And then what happens is the peaks and troughs change over from higher troughs followed by higher peaks to lower peaks followed by lower troughs. And the trend is really determined by the underlying fundamentals. And then as the underlying fundamentals change, so we'll get another head and shoulders. So you can see, just to show you, here's the head and shoulders change up from an uptrend to a downtrend. And here's the head and shoulders change up from a downtrend to an uptrend. It's very obviously theoretical. The markets are going to be driven by economic and financial fundamentals. And what we're seeing here is, of course, the head and shoulders potentially. I do like how the right shoulder is developing, but we still got a long way to go before it hits the neckline. And then to break below the neckline is going to require a real change up on the fundamental front. And I was thinking, what do we need to look out for that? And I think that if we go through to the real rate, if we go through, so this is the, let me just go to the weekly here, just so you guys can see it clearer. Here is the dollar. Here's the left shoulder. Here's the head. Here's the potential right shoulder. And here is the here's the real rate. And you can see we've got a positive correlation. If we go down to the daily, the correlation's stronger. But the idea here is, let's go to monthly, see what the monthly correlation is. Monthly is a very strong 90% at the moment. And it really has synced up since the quantitative easing, going into quantitative tightening. I think that's a key driver there. Certainly the interest rate movements, and if we're going to see a completion of the head and shoulders, I think we've got to keep an eye on the real rate. And I'm not sure how much more room there is for the real rate to move. I was listening to James Bullard, who's the St. Louis Fed president. He was being interviewed on Bloomberg yesterday. You know, and his the median forecast is for a terminal rate of 5.1%. You're saying his is slightly higher. He sees inflation still being quite sticky, and that's going to have a direct bearing on the real rate. So unless we get some sort of movement on this real rate downwards, the dollar may actually, let's just go back to Microsoft Paint, we might get something like this. Let's move this more this side. So we might get something like this, and this is obviously just speculation at the moment, but let's change it to black. So we might get something like this, something like this. Okay, right shoulder, but the right shoulder doesn't complete, and we might just get some sort of sideways movement as well. So let's just be cognizant of the fact that I think the real rates here are going to be a key driver of whether the pattern completes or not. And the idea is, yes, there is certainly looking as if there's a topping pattern here, but the topping pattern hasn't completed. So we just want to be cognizant of that. Another thing that I just want to point out, which I think is quite interesting, is if we go through to the real rate, and what we can do is, let's just take the US dollar out. Let's take the correlation coefficient out, and we'll change the US dollar. Let's just change this to UK oil. So we'll just take a look at the movement in the oil price, because we know that OPEC Plus cut production from May onwards for the rest of the year. So let's just bring that up. All right, so this is actually a gap. So the charting package here hasn't really doesn't show the gap. It doesn't matter. It's got a long range here. So it shows the movement from under 80 to now we're trading at 85. But what's interesting for me is that the real rate actually moves down. In other words, the bond market or the treasuries don't really buy into the story that it's going to contribute to inflation. Now, again, I'm not certain about that, but what could potentially stop the US dollar from charting that head and shoulders top is inflation coming through from the higher oil price. So we just got to be cognizant of the fact that, yes, it does look as if we're getting some sort of a topping pattern, but it hasn't completed yet. And that's very important for us to acknowledge. So I just wanted to point out that the US dollar, you know, is still in motion in terms of a pattern. Is it going to be a head and shoulders, or are we going to move into some sort of rectangle pattern? So we want to just be looking at that. The other thing to keep an eye on is rates here. The real rates holding steady despite the movement up in oil. I find that very interesting. The fact that there's been a lack of movement on the real rate side, perhaps the bond market not quite buying the inflation story from oil just yet. When we looked at oil yesterday, it was still in a very obvious downtrend in terms of a primary trend. I did read an article. Effectively, what the Saudis are looking to do, they are battling speculators. So any speculator that is shorting gold at the not gold, I beg your pardon, is shorting oil at the moment, needs to be extremely careful because the Saudi energy minister is now gunning for speculators. So we just need to be cognizant of that as well. So if anybody's trading oil to the downside, let's just bring up oil just to show everybody the trend. I'm going to just change this through to UK oil. And you can see we put in the trend yesterday. It's an obvious downtrend, lower peak followed by lower trough. So there's a series of these. Here's that gap that we spoke about, and but we still have the downtrend. It hasn't broken this lower peak yet. What we said yesterday, we just need to watch this RSI. If it stays above 50, then there is potential for that higher price. And if we get the potential for that higher price, well, we've got to watch the flow-on effect for inflation. Anna also brought in a very good point yesterday. What about the Chinese? Right? What the Chinese demand can be supportive of the oil price as well. We haven't quite seen that, okay? But it's something again that we've got to just be mindful of. All right. The next instrument on my agenda, I want to go through to Dex and Nasdaq. Let's just go back to TradingView. I want to take a look at these in terms of the COPOC indicator. And then I want to show you something quite interesting on Nasdaq on the weekly chart. So bear with me a moment. I'm just going to bring up the German 30 CFD. All right, let's change this to monthly. So when you're looking at the COPOC indicator, you want to take a look at it on a monthly chart. Let's take out the peaks and troughs here. Okay, let's add in the COPOC. And just to remind you, so Edwin COPOC designed this purely for entry. Entries, let me rephrase that. He designed this to try and indicate bottoms of cycles. That's all it's useful in its original form. Now, we're still under zero here, so let's just put in the zero line. Okay, so that's pretty close to zero. Let me just adjust that. And you can see how it's turned up beautifully from below zero. There's still space for this to move up, and DAX is moving very nicely. The COPOC is one of my favorite indicators. It's generally gives only a few signals because you're looking at on the monthly, right? But you can see if we go back to the global financial crisis, that's a beautiful signal there. That's a beautiful signal there. Here's a great signal too. Every time it turns up from below zero. Now you just got to watch out. I have seen articles out there that say the signals from when it crosses from below zero to above zero. No, that's not the signal. The signal is it turns up from below zero. Okay, it's not infallible. If we go back to the tech rec, it turns up here, and it does give a false signal. So we just got to watch the fundamentals as well. I think that if we get the interest rates, or if we do get some softening in the interest rates, that would create a tailwind there. But you can see the DAX is looking very interesting indeed. Let's bring up Nasdaq. Okay, let's bring up Nasdaq and take a look at Nasdaq. Okay, now this is a really interesting signal. Let's just bring in the, let's get rid of the drawings. Okay, let's bring in the zero line. Okay, let me just make this right on zero. Okay, and this is such an interesting signal, isn't it? So we've just turned up. There's a lot of potential room here. So a lot of, let's call that potential energy. The question now, does it become that kinetic energy? It does look as if we've started to move, and it's a very, very interesting signal. Okay, if we go back to global financial crisis, let me just make this logarithmic. Okay. This is a look at this signal. This really gave a terrific signal. Okay. This is a slight whipsaw here. So it's early. In the tech rec, it's early, but then it moves up quite nicely. So we've got a very nice, interesting signal here. Now, I want to couple this with an analysis on the weekly chart. So let's go to NASDAQ on MarketScope. And I put an article, just a short article out yesterday on, and I put it on Telegram on this momentum signal here. What you can do is, now you've got to be careful with trend lines. Trend lines don't determine trend. Peaks and troughs, or troughs and peaks determine trend. And then once you've got a bona fide trend as per a higher trough followed by a higher peak, you can use a trend line to monitor the momentum of that particular trend. Now take a look what's happened here. The gradient of the trend has actually shifted from this green gradient, it shifted higher to the orange. So we've actually got an acceleration in the momentum of the NASDAQ, and that COPOC has only just ticked up. It's only just given that signal. So there's a lot of potential energy here, and we want to just keep an eye on it. I want to be very clear that the analysis here is only analysis. It doesn't guarantee anything. Okay, so you've got to be very mindful of the fact that risk management and stop losses, those we don't discuss that much, but it's assumed that any single position has got a stop loss and risk and adequate risk management in. It must be that way. We won't do the mathematics of losses today, but I think everybody knows what we're talking about when we look at the mathematics. A 10% loss is not offset by 10% gain. So just be mindful that the analysis here is looking really interesting. And not only is it looking very interesting, okay, it's early. Now, another way you can look at this, by the way, let's get rid of the lines. I'll keep that rectangle. So I like looking at the RSI relative to the 50, but take a look at this. Okay, so we've got just sort of a complex pattern, but if we kind of see through the complexities, we can put a left shoulder here. But here's the complexity, sort of a double bottom for a head. Okay, and then it looks as if we've got the right shoulder here. So this pattern looks as if it has completed. Again, I think it's very much going to be a function of what happens with the interest rates. Okay, we're looking at this on a technical basis. We don't want to just isolate the technicals. We want to look at the technicals with the fundamentals. And I think that the story now with oil kicking up is something that we're going to have to monitor. The very last chart I want to take a look at is Euro US dollar. I'm going to do that on TradingView. And what we want to do here is I just want to show you, when you're looking at pairs, so obviously we're looking at a Forex pair, we're looking at Euro US dollar. Okay, so let's just bring that in. You want to try and match relative strength with relative weakness. So often what I found is that traders make their life difficult is that they go for all different types of either majors or crosses, especially with the crosses where it's quite difficult to actually get a reading of the relative strength and the relative weakness. But what I want to do here is let's just go through to the daily, and we'll take a look maybe at the weekly as well. But what we want to do here is add in the spread between the German 2-year yield and the US 2-year yield. So just go DE02, which is a proxy for the euro area, and just subtract the US 0.2. And why are we looking at the 2-year yields as opposed to the longer is because the shorter term, the shorter part of the curve tends to be very much synchronized, sensitive to monetary policy. And let me just delete it off this chart. Okay, and what we've got here is, let's put in a correlation coefficient. Okay, so again, just putting DEO2Y minus USO2Y, and just that should give us the correlation. And it's just a strong 70% at the moment, and it's really been moving strongly since the end of last year. And I think what that's reflecting is the relative hawkishness now that's emerged out of the ECB versus potential dovishness coming out of the Fed. And you can see that the euro-US dollar moving in that northeasterly direction. So is the spread. Okay, the spread's moving in that northeasterly direction. So as long as we see the continuation of the relative strength in the monetary policy of the ECB versus the monetary policy of the Fed, we'll keep an eye on the euro-US dollar. It's currently at 1.09. 1.10 is, I think, the next big level because it's a round number. They tend to be psychological levels. And after that, you've got 115 when we go into the second half of the year. Now, will it hit 115? Of course, I can't say that with any sort of honesty. What I can say is that if the relative hawkishness of the ECB continues against the potential weakness in terms of monetary policy of the Fed, then I think the areas between 115 and 110 certainly are areas to monitor. What's the big bugbear there? Oil. Okay, how does the Fed reply to oil? At the moment, the Treasury market suggests that there's not too much worry. They haven't. We looked at the real rate. Real rate didn't move. Moved actually in the opposite direction. So you can see that we've got a very interesting a technical picture that's starting to emerge here. We want to keep that very much in focus with the underlying fundamentals. That's what we are going to be covering today. If there's any questions, go ahead and type those in. Friday is our live NFP trade. It is a public holiday here, and I think it's a public holiday in various regions. Nevertheless, non-farm payrolls are coming out this Friday, and we are going to be doing a live trade. So please join me for that. The link is in the chat. All right, nothing coming through. So we shall, I think, let's end off here. Thanks very much, guys. I want to wish you a good day and a good evening ahead. And Anna, I'll just pop it in again. Just bear with me. Did you get the link, Anna? Just let me know. Let me try and send it another way. Oh, you got it. Okay. Okay, excellent. All right, guys, I'm looking forward to that. Have a good day, a good evening ahead, and we shall chat tomorrow. Remember, tomorrow we'll have a shortened morning market review. We'll do a crypto minute after as well. Thanks very much, guys, and speak to you tomorrow.